Have you ever told yourself, I'll start investing once I have more money? Maybe you feel stuck living paycheck to paycheck. Maybe you're afraid of losing everything in the stock market. Or maybe you just think investing is only for the rich. Here's the truth. Thousands of everyday people started with less than $100, and today they're on the path to financial freedom. The difference? They didn't wait. And in this video, I'm going to show you exactly how you can start investing in 2025, even if you feel broke right now. Take Alex, for example. He was a delivery driver who started investing just $10 a day into index funds. 10 years later, he's sitting on a portfolio worth 6 figures. Or Maria, who began with $200 and by sticking with dollar cost averaging, grew it into $15,000 in less than a decade, without trading full-time or having a finance degree. These aren't lottery stories. They're proof that small, consistent investing can snowball into wealth over time. And today, I'll share 10 simple, beginner-friendly tips you can use to start, even if you only have a few dollars to your name. Before we dive in, a quick disclaimer. I'm not your financial advisor. I don't know your goals, risk tolerance, or personal situation. What I'll share here is for educational purposes only. Always do your own research and, if needed, consult a financial professional before making big decisions. So let's get into the 10 tips. Tip 1. Shift your mindset. The number one reason people never start investing isn't money, it's mindset. Too many people believe investing is only for the wealthy. But the reality is that wealthy people became wealthy because they invested consistently, even in small amounts. Compound interest is the magic here. If you invested just $5 a day into the stock market, historically, you'd be a millionaire in about 40 years. That's the power of starting small and staying consistent. Tip 2. Overcome fear. Fear keeps more people broke than lack of money. Markets go up, and yes, they crash, but every crash in history has been followed by a recovery. Think of investing like planting a tree. You don't dig up the seed every day to check if it's growing. You let it sit, water it, and give it time. The same goes for your investments. Short-term fear will kill long-term growth. Tip 3. Build your foundation. Investing without a foundation is like building a house on sand. Make sure you have an emergency fund of at least 3 to 6 months of expenses. Pay down high-interest debt because you can't out-invest a 25% credit card rate. And if your employer offers a 401k match, take it. That's free money you don't want to leave on the table. Tip 4. Start small. You don't need thousands of dollars. Fractional shares let you buy slices of stocks or ETFs for as little as a few dollars. That means no excuses. It's literally cheaper to start investing than buying a fast food meal. Tip 5. Index funds over individual stocks. Here's the harsh truth. 95% of professional stock pickers can't beat the market long term. Index funds let you own hundreds of companies at once, spreading out your risk. If you want it even simpler, look into target date funds. They adjust automatically as you get older, moving from higher growth to safer investments over time. Tip 6. Automate your investing. If you try to save what's left over, you'll never invest. Life gets in the way. Automate your investments instead. Set your brokerage app to auto-deposit $20, $50, or $100 every month. You won't even notice it, but over time it builds serious wealth. Tip 7. Understand risk versus reward. Not investing is actually riskier than investing. Why? Because inflation eats your savings. Leaving money under your mattress guarantees you'll lose purchasing power. Investing gives your money a chance to grow, and diversification keeps your risk in check. Tip 8. Use tax-advantaged accounts. Want to keep more of your money? Learn about tax-advantaged accounts like Roth IRAs, 401ks, and traditional IRAs. The type of account you choose can literally mean thousands of extra dollars in your pocket at retirement. Tip 9. Stay calm during market volatility. Market crashes aren't a matter of if, they're a matter of when. The worst thing you can do is panic and sell. Every recovery in history has led to new highs. If you're young, downturns are your best friend. because they let you buy more at discount prices. Tip 10. Track progress and increase contributions. Don't just set and forget forever. Every raise, every bonus, every side hustle, invest a little more. Small increases accelerate your path to wealth massively. Over time, you'll look back and be amazed at what started with just a few dollars. So here's your challenge. Start today. Even if it's just $5, become an investor. Your future self will thank you. If you found this helpful, hit like, subscribe, and share this video with someone who needs a push to get started. And let me know in the comments what's holding you back from investing right now.